Looking at the Markets with David Modell.
Hello and welcome to Looking at the Markets with David Modell. I'm a huge fan of gold, precious metals generally, and mining stocks. And I like to interview the world's foremost experts in mining and resources, such as today's guest. He's a return guest, Mr. Dan Wilton, CEO and Director of First Mining Gold. Mr. Wilton, welcome back to Looking at the Markets, sir.
David, thanks so much for having me back, and I'm flattered by your characterization of me as a world's foremost expert, but I'll take it.
You have certainly earned it. So I wanted to talk about First Mining Gold later on, and if people are interested in learning more about your company, they can go to firstmininggold.com if they're interested in the stock, on the TSX exchange, ticker symbol FF. On the OTC exchange, ticker symbol FFMGF. But let's get into gold. I'm going to guess that you're bullish on gold and metals in general. I think that's a fair assessment. You know, I'm not going to ask you for a specific price target or anything like that. But with the Federal Reserve totally committed to letting inflation just run hot above 2% for extended periods of time, what does this mean for the economy, and what does it mean for gold and silver?
Oh, listen, David, I think we're in a pretty unprecedented time here where you've had really what can only be characterized as probably the most significant shift in monetary policy, certainly in my lifetime. You know, the move from inflation fighting, which really kind of started in the 70s, that's been the mantra and the focus of central banks, you know, in order to keep price stability in an economy and allow people to accumulate wealth. Well, we're in a very different situation now, and I think you know, the transition to basically giving up on inflation targets and more or less signaling a monetary expansion with no real limits to it. And it's not just the U.S. government; it's almost every central bank in the world is pursuing the same thing in this kind of race to the bottom. I just think it's a really, really good time for people to be thinking about adding some, you know, hedge to their portfolios. And I think gold and silver are both great ways to get some of that diversification and hedge. I mean, amongst other real assets, but gold and silver, I think, can play a pretty unique role in someone's portfolio.
Absolutely. I'm into gold for growth and for portfolio protection at the same time. And what about silver? The move in silver in the last 6 months has been astounding, hitting through 24, 25. I remember at the worst part of March, it was 11 and change. And yet it's been so much higher. I mean, can it reach all-time highs this year, next year? What do you think?
Yeah, I think it can. I mean, I'm not a silver expert by any stretch, but I watch it a little bit more closely now that you know, we own some First Majestic shares inside First Mining through our silver streaming deal that we've done with Majestic. You know, I'm a big believer in the gold-silver ratio. I'm someone who's been involved in financing mining projects and involved in the finance sector of the mining industry since the early 90s. And so I've seen it move on either side of kind of the long-term average. It tends to revert to the mean. And I think that big move that we saw after the crisis selling in March really was the beginning of reversion to the mean, right? And you're now sitting with a gold-silver ratio around 80, which is at the higher end. I mean, I think you'd say 40 to 80 is the sensible range. You know, probably your 95th percentile of where it's traded over the past 40 years. 60 is kind of that average number. So yeah, I think it's still got some more room to revert to the mean, but a lot of that catch up has been played. But if you believe in robust gold price performance, then I think you have to believe in robust silver price performance as well.
Yeah, I believe in both of them, absolutely. And we have an election, a very contentious one coming up. Do you recommend that people should change their investing strategy in any way whatsoever because of the elections, or is a portfolio with resource stocks and other types of stocks, could it withstand no matter who wins? What do you think?
Yeah, to stay at the outset, I have the advantage of being a bit of an impartial observer in the U.S. election, as I'm a Canadian citizen living in Canada. So we get to kind of watch it as, blood sport.
Right.
But I think when you look at the potential outcomes of this election, you're either going to get more stimulus or you're going to get more stimulus, right? Both parties are talking about massive spending to continue. Some of it backed by some increases in taxation, some of it backed by just, more deficits being incurred. But you just got to keep in mind, remember what sent the gold price to 1900 in 2010 and 2011? It was the fact, if you can imagine, that the U.S. government was going to run on the back of the global financial crisis of 2008. U.S. government was going to run $1 trillion annual deficit, and that was unfathomable beforehand. Sent the gold price rocketing. Well, what people need to keep in mind is the government was going to run $1 trillion deficit before COVID, right? That was the base case before any of the expansion that's come. You're now looking globally at, somewhere like $20 trillion of money supply pumped into the economy. I think on either side of this election, listen, there are probably some specific risks to U.S. Development assets that I'd want to have my eye on in this election. If you own a company that's developing a mining project in the U.S., you'd want to just be conscious of what could happen if the Democrats win, because I think you have a big reversal in some of the changes that you've seen at the EPA and in overall permitting timelines on mining projects in the U.S. But for projects in other jurisdictions and having exposure to the commodity, having exposure to mineral development, I think it's a great time. And, I think us at First Mining, we're very, very well positioned with this portfolio of projects in Canada, now fully funded to get it all the way through a bunch of really critical milestones in the next few years in what we think is going to be not only a really supportive gold price environment, but more importantly, strategically in the gold industry, there's just been no investment since 2012. Very little investment. And so when you get to the point of understanding really where that supply of new projects is, if you have a project that's not being permitted today, you're probably not going to see it produced before 2030. And the producers all have mine lives and production profiles that are going to fall off a cliff in the back half of this decade.
All right, fair enough. Now, speaking of great results in the gold and resource sector, in late September, First Mining Gold announced some really encouraging drill results from the Pickle Crow Gold Project. I'm looking at the numbers right now, but I'd rather get it right from the man himself. So what can you tell me about the drill results?
Well, those results, and you got to understand, we've optioned Pickle Crow off to a partner. Now, we did that at the beginning of the year. That deal closed in mid-March of all timing. We brought in a partner, an Australian group called Ateco Minerals, who's going to spend $10 million to earn into 80% of Pickle Crow after they give us a bunch of cash and shares in their company. So this is a team with a great track record of success at finding high-grade gold in past-producing gold camps. The other company they're involved in Australia is called Bellevue Gold. That's gone from a zero to $1 billion Aussie market cap in 2.5 years. Basically by going into an old gold mining camp, high-grade underground gold camp, applying new geoscience and particularly new structural analysis to try and better understand what a bunch of the people who own the mines in the past and old producers might have missed. And then they've been able to raise enough capital to do the proper amount of exploration to delineate resources. And so they looked all around the world for the next project and came to Pickle Crow, as the Pickle Lake camp in general is a very underexplored greenstone belt in Canada, and Pickle Crow particular, with They produced at Pickle Crow for 30 years. They've got 3 shafts, kilometers and kilometers of underground development. And so that was where they really wanted to apply this model the next time. So those drill results are really just from the first 4,000 meters of what is now a 45,000 meter drill program for the next year. They are going to hit it really hard. And the important thing is that they've, through some of their structural analysis, identified where they think they would find new veins that might have been overlooked before. And sure enough, in some of that drilling, they've hit in this new structural interpretation, which means there's a lot more gold to find. But they're hitting it really hard right now. And I think over the course of the next 6 months, we're going to continue to see an accelerating amount of drill results coming out of Pickle Crow. But it's very exciting.
Okay. Well, I've been very fortunate. I had the opportunity to interview Mr. Keith Neumeyer. He's well known and renowned as the CEO of First Majestic Silver Corp. But what is his relation with First Mining Gold, and how does that add value for shareholders?
Yeah, so Keith's a founder of the company. In large part, the portfolio that we have today was accumulated based on a thesis that Keith had in 2015, 2016, that you could not explore for and find gold cheaper than you could buy it at that time. This was after 4 years of crushing bear market in gold exploration and development equities. And a lot of people had just given up on their projects. They had no access to capital. And so Keith and some like-minded individuals founded a company, raised some money, and then went and bought 8 companies or projects in 12 months. And that's what's delivered us this portfolio. That caught a lot of excitement at the time. Our share price was up over $1 in that run-up and in the kind of creation phase. But what's happened since then is an enormous amount of work and an enormous amount of good technical advancing, de-risking of the project. Springpole is going through a permitting process. We'll talk about that in a minute. But Keith's been the chair of the company all the way through. So he's still very actively involved chair. A great contributor to the overall strategy of the company. And, we're blessed to have as a number of our shareholders, people who followed Keith in his very successful endeavors at Majestic and beforehand. And, they've been a really great group of shareholders to support us when we've needed it the most.
Yeah. So what's in the pipeline? What's next for First Mining Gold that you can tell us that you just can't get from the investor presentation on the website?
I think what doesn't jump out of the investor presentation in the website is the fact that we've really changed this company, changed this portfolio of projects in the last 6 months. From, it's always been a transition from that asset gatherer mineral bank, which was the strategy really at the outset, to now we've got and are actively developing and well-funded to get through to milestones, one of the biggest undeveloped gold projects in Canada. And if we get that permitted, this is a project that at $1,500 gold has an after-tax NPV of 1.2 billion US, and leverage to gold such that every $100 of incremental gold price is $200 million US, i.e. almost our market cap today, in net present value of the Springpole project. This is one of the largest undeveloped projects, one of very few projects in the world capable of producing 300,000 ounces or more per year. So we're very excited about moving that forward, and we're in some really critical phases right now with a pre-feasibility study coming out early next year. And we're advancing through completing an environmental impact statement, which we'll submit, and that starts a pretty reliable 18 to 24 month time frame in Ontario for us to get permits. And when you have permits with a project like this, we should see in our share price, 0.5 to 0.7 times that net asset value. And in a positive and increasing gold price environment, at $2,000 gold. This project doesn't need $2,000 gold, which is important. But at $2,000 gold, you're talking about a $2.5 billion NPV. We should see, multiples of our share price as we take risk out in what is a pretty near-term time frame here over the next 2 or 3 years. So we're super excited about that. But we have the opportunity to do that because we've raised enough money to be able to do it. And we've also been able to focus on Springpole by moving forward a couple of our other assets, and one of which was Pickle Crow that I talked about to find a partner there. We also sold our Gold Lund project, which we think is one of the best undeveloped open pit potential projects in Canada. We sold it to Treasury Metals to combine with their Goliath project. So we now own 40% of Treasury Metals, which trades on the TSX. TML is the ticker. And that has an even nearer term move through a scoping pre-feasibility study, feasibility study, and getting their final permits for their Goliath mill, which already has its federal environmental approvals, which is really important. So we think this is a 2 million ounce plus going to 5 million ounce gold camp just off the Trans-Canada Highway, advanced permitting stage. And our intention is to distribute a bunch of the shares that we receive, more than half the shares, and all the warrants directly to our shareholders around the middle of next year. So if you're a shareholder of First Mining, you are going to receive a share and a warrant, or a proportion of a share and a warrant of Treasury as well. So you become a direct shareholder in that. That gets us down below a 20% holding. But those with a bunch of the cash and shares and things that we're going to be getting through those deals, those two projects plus the cash we have in the bank and the money coming in from our Silverstream deal, together that today equates to almost $250 million of value, right, out of our Canadian, of our 300-ish million market cap. So bizarrely, by kind of highlighting the value of those projects, you can really see that Springpole, which I think was the only project we were getting value for at the beginning of the year, Springpole today is actually, you're getting it for cheaper than you were getting it at the beginning of the year, in spite of the gold price being $400 or $500 higher. So I think we've got a great trajectory to keep focusing on the fundamental value of our projects. We've got 3 other million ounce deposits in Canada, great jurisdictions, and we're just kind of in the process of finalizing our plans to figure out what we do with each of those projects. Some of them can use some more investment. Some of them, we could explore at ourselves. But we have all this optionality of these other projects, which, those other 3 projects should be worth, roughly in that $75 to $100 million value that we've got for Treasury and for Pickle Crow. So much upside in this company with leverage to this increase in gold price.
Yeah, and it's a great way, it's an easy way to get into the resource sector for the next leg up in gold. And people sometimes ask me, can I get this in America? Can I get it in Canada? Sure you can. On the TSX exchange, ticker symbol FF. And if you're in the United States or wherever they allow OTC market trading, most brokers will allow it. FFMGF is the ticker symbol. FirstMiningGold.com is where you can learn more about it, because I don't want people just to buy something just because somebody in a video likes it. I want you to research it on your own. But once you see the investor presentation, you see the website, you're going to like First Mining Gold. Dan Wilton, always a great guest. We're going to have you back here, especially when gold goes to 2,500, 3,000. Then we'll have a lot to talk about. Then we'll have to talk. We'll see what's next. Cross that bridge when we get there. Thank you, Mr. Wilton, for coming on to Looking at the Markets. Thanks a lot.
David, thanks so much for having me.